Okay, so today we'll be looking on how as a new trader, how you can start up your trading journey. Okay, today I like teaching with raw live charts. Okay, because raw live charts, gives you that mindset of you trading what you are seeing, right? Most times, the videos we watch are almost all these hands care generated and all of that. So but I like teaching um with live candle, live trading, right? So as a new trader that is actually new in this very company, or someone who just chose trading as a sideways career, or you just want to learn new thing. Okay, trading is one of the best thing that you would ever learn. That's if you put your mind to it. You will make a lot of money, trading and the likes. Okay, so and it's very sweet, like it's very lovely, it's very sweet. Just put your mind to like learning and all of that. So it's very simple. So first thing first that you have to do as a beginner, like I always say, I trade with weekly candle, 4 hours, 50 minutes for my entry, or 5 minutes sometimes. Okay, for confirmation. So now I'll be elaborating on what's going on with Bitcoin, right? I'll be talking on mostly on what's going on with Bitcoin currently. Okay, so here this was the highest high Bitcoin made. That is around $124,952, and this was last year, September 25. It made it October 25, sorry, on Monday. So you can see the movement of Bitcoin, from 41, from literally 15,000 to up to this area, right? This is the highest high it has ever made since Bitcoin was created in 2009 or thereabout, right? So this has been the highest high it has made. Okay, like I said, trading using weekly candle is the best. Like when I say it's the best, it's just the best. You will see everything that is going on in the market. It's not like using one day candle and all of that. So weekly is the best. Okay, so now we want to mark out our order block. So when I say order block, I mean the area of interest where you should be very mindful of as you are trading Bitcoin, right? So the first one was the highest high it made, right? So the second one, if you can see, is this area. It touched this area and it started going down, right? And another area here is this area. It touched this area and it started moving down. Okay. When you look closely, you see that it touched this area, then it started moving down. The reason why you are seeing it that, oh, this place shouldn't be that important is because it's a 1 week candle. Don't worry, we are going to it. So, and the last place was this area. It touched this area. Sorry. Oh, that's not the candle I'm using. So it touched this area and it started moving up. So this down area is showing us that, oh, Bitcoin should move up. Okay, so these are your area of interest. These are your area of interest. So anytime the market goes to this area, you should be mindful of there should be market shifts. So the market shift I mean is there should be a kind of reaction there. It might be minimal, but there will be reaction in these lines I've drawn, right? So now let's mark out another order block using our 4 hours. You will see what the market is doing. Okay. So this, I don't want the screen to be a kind of messy. Okay, so this is our area of consideration. So you can evenly see it's very very clear, like it's clear. You can't just undo it. Okay, so now you are seeing the movement, from this area, from here. Okay, it's moved from this area, to this area, to this area, to this area, up and started coming down. So this is to tell you that those our order block are very very vital as once Bitcoin is concerned. This won't be a long video, right? But I'll make sure you understand every bit that you need. Okay, so if you check this very area now, it's very clear, like it's glaring that, oh, Bitcoin, this is where it gets to. At this point, there should be a market shift. There is a liquidation, there is liquidity grab, I mean, and all of those things, right? So this is how Bitcoin is moving. This is the movement of it, right? So now there are some things you have to be very mindful of. There are some liquidity grab that they are literally not a liquidity grab, but because we've seen some kind of movement, we feel like, oh, it's a liquidity grab. Okay, let me show you some example of that. This liquidity grab can confuse you, into actually shorting, right? Is a nice one if you are shorting using this liquidity. But this liquidity grab around this area is what we call smart money concept. So it's smart money that can trade this kind of market. What I mean is, if you are someone who trades demand and supply, you wouldn't want to like consider this very area as your resistance area, your yeah, your demand area, right? Your supply area, I mean. So this particular area is a liquidity grab, but it's not a kind of like a major demand zone. You understand what I'm saying? So what I mean by that is this area is for smart money concepts. People who trade smart money. You can hardly see someone who is trading with hedge fund, come into the market and start using this area as their resistance zone. It's very rare, right? It's just for smart money concepts and all that. Okay, so but it's actually valid for smart money. Like I said, it's valid. Like someone who didn't catch Bitcoin at this area would want to like look for a way to like catch it. And when it's moved at this space, when it's moved at this space and it came down, I don't know if you're seeing what I'm doing. I will explain what's going on around that area. So this is what we call FVG. Okay, so maybe when Bitcoin got to this very area, you kind of like missed it, right? So you have to draw, there is a big line around this area. Let me draw a straight line here. There's a big line, there's a big candle that made a big move around this area, right? So when you see a big line at this area, let me remove this so you can understand what I'm trying to like say. You can see a big line around this area. This big candle is actually a big pump that has to be filled. So when I mean it has to be filled, is in the sense that there are FVG here that needs to be filled. You can see it around this area. Is around this area. So let me make it very big so you can see what I'm trying to like explain. Okay, you can see it around this area. So the FVG is like a space to be filled because of the impulsive move. Because of the impulsive move from this area, because of the impulsive move from this area to this area, there was a gap. There is a gap around this area that has not been filled. I don't know if you understand what I'm trying to like explain, but I hope you understand. Okay, so because of that gap, so you draw your FVG gap here because that space needs to be filled. Okay, so because the market has started a kind of reaction around this area that, oh, Bitcoin has over pumped. Okay, it has pumped to a minimum, to an average point where it starts going down. So and it started coming down and you couldn't catch it around this area. You couldn't catch it around this area. Oh, I don't know. So because you couldn't catch it around this area, because you're waiting for confirmation, you don't just go because there is little to no liquidity ground, right? So you are literally waiting for it around this particular area. Okay. So and you are waiting for your confirmation before you enter a trade, which is very right. So because you couldn't catch it there, and Bitcoin has made a big liquidity grab here because of these candles. Because these candles, if you look at them very well, they are not like moving well. They are kind of like distorted. The distorted I mean here is it starts pulling down, right? It starts going down, is losing momentum. So because it starts losing momentum, it starts going down. And here you can see there was a liquidity pool around this area. So and you couldn't catch it there. So you have to draw your FVG. So you have to draw your FVG to catch that trade because Bitcoin is actually on a downtrend around this big candle. Because of this big candle it has made, that is a change of character, right? It changed a character here from here to here, and it's get this impulsive move and start going down. And you have to wait this from this candle, you have to come down here to change it back to fill this gap that I said. Once it fills it, you see that after filling it back, then you wait for it to move back to this area again. So automatically you have to wait for it there. You have to place your short around this area and wait for the market. You have to place your short around this area and wait for the market. You put it around this area. This is the highest liquidity graph that I made. So you put it around this area for the market to react, for you to buy in, for you to like buy in and ride the market. Okay, so this is how to like trade this kind of market. I mean, this liquidity grab here. That's what I'm trying to like explain to you, that hedge funds, what I mean hedge funds are people with big funds, right? They don't trade this kind of trade because they are going in with billions of dollars. But for you as an average trader, someone who is looking out for money, money, maybe you're day trading, maybe you want to like make a quick cash, it's people that trade this kind of market, right? So you just place your FVG. When it gets filled, there is possibility of you entering the market and riding it down. You can see how the market rode it down to this area and started moving again, got to this our resistance and it respected it and started going down. Okay, so But for the fact that, okay, this is, although it's just for educational purpose actually, so we missed this area for real. We really missed it. So now, when it got to this area, you knew when it got to this area, it will definitely come down because that is our recent resistance. Okay, it started going down, and the way I'm seeing Bitcoin, there's probability of it getting to 60,000. So the 60,000 is around this area. 60,000 is around this area. So we are still going to that, but I'm just trying to like let you know that using higher time frame gives you that edge that most people don't even see. Okay, and as a matter of fact, using higher time frame will give you that kind of that confidence that you are at the right position to buy or sell. Okay, and I want to like encourage every one of you here that watching this video, that even if you execute one trade in a week, trust me, and you know what you did, you can make the whole of money that people trading daily can't. Because imagine you getting all this set up and it worked for you, and you are actually caught this trade and you are riding it down. Imagine someone that is just scalping, and before you know it, there will be a market skype and the person may be taken out of the market. So here there is no way the market will react with weekly candle and can be taking you away within a day. It's not possible. There is no way. It can just go up, but definitely it can't get your entry because you are using weekly weekly time frame. Okay, so now let's look at, okay, we actually miss this setup. So now, as someone who is trading demand and supply, you should come and wait Bitcoin around this area. The waiting is not for you to set or enter the trade now. You are not entering it. You have to wait for confirmation before you enter. The confirmation I mean here is liquidity grab. There will be a liquidity grab and market shift. You don't just enter because when it gets to this area, this mindset of guessing has killed many traders. That, oh, when it gets to this area, there's a change of character, it tends to go back. It can get to this area and start dropping again, and it could drop, more than what we expect. It's the reason why you have to wait for confirmation before anything. So this is your setup actually, and you have to wait for it. You don't just place orders so it can automatically start buying for you and ride the market. It doesn't work that way. You lose money. So this is what I have for you, using 14 4-hour time frame. So imagine we were able to like catch this trade around this area. Let me show you how to buy, how to catch an early buy. You buy before every other person, right? So how you can buy this kind of market? This is what I do. I consider the highest high, or the highest or the lowest high it's made before that impulsive move, which is here. If you look closely, you will see it around this area. Let me show you very well. You can see it around this area that I marked. You can see it around this area that I marked. Okay, around this area, you can see it around this area. So around that area, I mark. That is after it has made an impulsive move. So the impulsive move is around this area. Okay, so that's how I catch my entry, my early entry. So after that impulsive move, like what we did the other time, so this was the impulsive move that it did. This is the impulsive move. Let me broaden it. Oh, sorry. It made this impulsive move. You can see the candle. I don't know if you can see it, but this is the candle. So you can see that this area has not been filled. This area, let me show you, this area has not been filled. This area has not been filled. After that impulsive move, that area that has not been filled, you mark it out. You mark it out like this. I don't know if you guys are getting me. So you actually mark it out and wait for it. When you mark it out, you set your sell order. Sell order is around this area. Where is it? This is your set order. Here is it, the highest high it's made. This is 3:38. This is the highest high it's made. Okay, so this is it. You have to like just wait for it. You see, it's very simple. You have to just like have to wait for it, right? When you wait for it, there is no possible, like it is very hard for you to like not to catch it very early, and you ride the market the way you like it. It's very simple. So all these ones are just, maybe you are trading for smart money concepts and all that, then you'll be making use of this ones, the highest high it's made, dropping off like this. This place got filled. So when it got filled, it's made a drop. It dropped below these trend lines. But this is actually 15 minutes. Is not correct, right? But I'm just making, for you to like get an early entry. So when it enters here and it came down, the highest high it will make should be your entry. Like this place should be your entry. You can see, but this is not right. I'm just making an assumption, right? So this is it. This is how to catch early entry in any trade. That's if it has gone to where you feel like, oh, this should stop, start selling at your resistance or at your buy order. At your resistance or at your buy order. Okay. So like I said, I still use the same let me check. I see the same snippets, or I use the same as every other thing I'm buying. So let me show you how I enter the market and ride it. I don't know if this thing is showing or something. Okay, let me know if it is here. Okay. So around this area, like I said before, that is how I catch it. Okay, this is the lowest low it's made. The lowest low, you just mark it out. You mark it out and wait. Because one thing, you've seen the liquidity grab around this area. You've seen the liquidity grab around this area. Bitcoin is even easier to trade than any other coin. If we are using higher time frame, not lower time frame. You can see this is a liquidity grab, marking out the lowest, the highest low it's made before the lowest low. The lowest low I made is the liquidity grab. So you just come here, you set your buy order. You set your buy order, sorry. You set your buy order to the lowest around here. Okay. Up here should be your entry. And you just ride it. I like trading 1:30 something or 3:38, 3:37. That's what I trade, because with that I can easily leave the market even when it is going my way. I don't care. I'm okay with the one I had. Okay, so this is how to like catch early entry and how to analyze the market very well.